Good morning and welcome to the Killik & Co market update. Most major global indices come into this week relatively unchanged. The UK has actually been a fairly decent performer. UK oil and gas sector itself is up about 2% on the week coming into this morning, and that's largely attributed to fairly solid results out of BP this week. US earnings season, we're about 65% of the way through that at the moment, and actually on the whole results have been fairly solid. And so with that in mind, we picked out a couple of the companies that we were looking out for this week. So Alphabet is the parent company of all things Google, beat market expectations on both earnings and revenue. Earnings per share were $12.77, which beat consensus estimates of $10.86. But if we look across actually the increases here in revenue, we can see all the way pretty much across all regions, revenues were up fairly strongly. Advertising revenue was up 20%. And other revenue increased by 31%, so that was driven by cloud, hardware and Google Play as well. So obviously they have their Waymo self-driving program, and that continues to progress fairly nicely, although maybe numbers were a little bit behind where the market thought they were going to be in that side of things. We also had numbers from Spotify, the music streaming business, which topped 2018 estimates and guidance. It had revenues were up 30%, gross margin increased to 26%, and ended 2018 with 207 million monthly active users, 96 of which are on the premium fee-based service. It's also acquired a couple of companies in the podcasting space, which it sees as a growth market. So we also had a positive set of results from a couple of the oil majors as well, both in Total, French-listed entity, and BP, obviously in the UK. Total announced a 3.1% dividend growth and a further $1.5 billion in share buybacks, and BP also increased their dividend as well, so dividend growth there 2.5% higher than a year earlier. Yesterday, the Bank of England cut its forecast rate of growth for the UK from 1.7% to 1.2% this year. So that will actually be the slowest rate of growth since 2009, should it be realised. Basically, the Bank of England cited ongoing Brexit uncertainty and a slowing global growth environment as well, but did note that business investment in the UK has been falling, and generally consumers have been a bit more cautious around spending. So you might be wondering what this might mean for interest rates going forward. The market's currently pricing in just under 0.5%, 50% chance rather, of a rate rise by the end of 2019, and a sub 2% chance of a rate cut. And in fact, Bank of England now sees just one rate hike over the next couple of years. So clearly the situation's fluid, and the Bank of England has said as much. A no deal or a positive or a soft Brexit, a hard Brexit, will obviously play its part within policy going forward, but equally so will the actions of global central banks as well. So we can see how the market's expectations of interest rates has changed over the last few months actually here. So if we have a look at this little table here, we can see that expectations have been rowed back. So on the 1st of October, the market was pricing in nearly a 75% chance of rates being higher than the current benchmark rate of interest at 0.75% by the September 2019 meeting, so in a few months' time. But Brexit concerns and a slowdown in domestic and global activity has seen this strip back to roughly about 25% chance that rates will be higher in September this year than they are now. So for the time being, Bank of England's in wait-and-see mode pretty much like the rest of the world. So away from some of the gloomier headlines you might have been reading about this week, I thought it would be interesting to take a step back and look at some of the bigger picture. As you may expect, we spend a lot of time internally here looking at what the future may hold, which will help us drive investment themes going forward. So we were asked an interesting question this week, and that was, could we name the top 5 of the top 10 US companies in 1917, in 1967 and 2017. Now, pleased to say that 2017 and 1967 actually weren't too much of an issue, but we did quite struggle with 1917. So an exercise like this is interesting because it not only forces you back to think about specifics, but it also makes you realise just how much things have changed over the passage of time. So we can actually look at a list of these companies here, the top 10. We can see the effects of the digital revolution really in action. So in 1917, we were all about industrials, oils, and meat packing. In 1967, we saw the emergence of technology through IBM, camera companies, alongside continued energy dominance. But if we fast forward 50 years, it's heavily dominated by tech. Healthcare makes an appearance, and so do financials. So clearly some of these companies from 1917 and 1967 still exist. Some of them were bought out. Some of them have just fallen by the wayside. So if you turn your attention to that 2017 list, you might be wondering, crikey, this is maybe a little bit scary. You know, how many of the world's biggest companies now are still going to be here in 50 years' time? But it's actually pretty exciting because this constant cycle of change creates wealth, it creates new jobs, and it creates new industries, and it further progresses innovation. So with that in mind, we were asked one final question. Which company, given the dominance of technology and the current pace of innovation, will be the world's biggest in 2027? So we had some interesting answers. We had US companies, we had Chinese companies. We didn't actually have any companies from the UK, but we also had companies that don't exist at the moment. And that's not all that surprising when you consider that Facebook, which is the 5th biggest company in 2017, is actually only 13 years old at the time. So with that in mind, we'd actually really like to hear what you guys think. So we'd be really interested to know what you think as well. So why not leave a comment in the box below? Which company do you think will be the world's biggest in 2027? Which companies in that list in 2017 do you think will still be there, and which ones won't? Again, it's a pretty busy calendar for corporate earnings next week, but some of the ones we'll be looking out for are TripAdvisor, AstraZeneca, CME Group and Airbus. That's all for this week. See you next week.